We talk about the dollar index 20-year high, the BB-Dixie at that 2-year high. How much of this has to do with actually the weaknesses of other currencies like the yuan and the yen and the euro?
Yeah, it's a real combination of factors, and certainly there has been some localized weakness. As you say, the yuan, a very sudden move over the past couple of weeks after an extended period of stability. So the volatility is picking up there, and just seems as though China reached a point where it wouldn't let its trade-weighted gains of the yuan go much further. The euro's obviously got very specific weaknesses on the energy side. The hit that's going to be to growth. The war is on its doorstep, so that one's been very weak for a while. I think for me, for the euro, the only surprise is really what took so long to really get going on the downside, and why we sort of have seen any real rallies since the war broke out in February. And certainly, as you say, real focus on the yen. The suddenness of the move is very dramatic. The Bank of Japan delivering pretty much what I was expecting yesterday, but it's clear that there was some lingering hope that maybe all that commentary from the Ministry of Finance in the preceding couple of weeks might be reflected in a slight tweaking of stance from the BOJ, but they're sticking with their yield curve control policy, and that's just ignited a fresh wave of dollar buying. So I certainly agree with the 135 area as the obvious target.
And the Goldman Sachs call that even if the government came out and intervened through the BOJ, that wouldn't actually help. What do you think?
Oh, it'd be a very lively day. Garfield was talking about volatility earlier, so it would be a very pretty wild day. It seems ridiculous that they would. That's why I was very puzzled that they would bother talking about it. Really crying wolf on that, I think. So it just doesn't align with monetary policy. We've just had the BOJ telling us that they need to keep monetary policy loose, and the side effect of that, not a target, but a side effect of that is a weaker yen. How much weaker? Yes, they'd rather it wasn't so volatile, but really they aren't controlling it. The MOF admits that the currency will be set by markets, and we haven't seen intervention for a long time, and it just doesn't align with their monetary policy settings. So if you are going to intervene, then the week before the Fed kicks off what's probably a series of 50 basis point rises is not the time to do it. So they could keep that for coming months perhaps, because I do think spec positioning is getting lopsided, and there will be a pullback at some point. And if we're talking longer term, at some point, maybe it's later in the year, markets will start to think about has the Fed done enough? How close are they to getting to the end of their cycle, given that they're front loading it?
One of the interesting moves we've seen is the plunge in the yuan, right? Take a look at this chart showing offshore yuan, the big moves that we've seen, and in fact, the big moves in volatility as well. Offshore yuan on track for the steepest monthly decline since inception. Last time we've seen anything kind of close to this magnitude was back in 2015. When you take a look at the relative moves to the euro, the yen, the Aussie, what's going on here?
It's the suddenness that is so striking, really. I mean, the things really kicked off on the 18th of April. So that's when we had a GDP report that looked okay on the face of it, but we had notable weakness in the March data, particularly the retail sales. So you can't help thinking that, I mean, it's not as though we get an announcement from the PBOC explaining what they're up to. So we really have to read the tea leaves and look at what's happening in China's economy, and certainly the growth is being hit hard by the zero COVID policy, the outbreak trying to get Omicron under control. So that's really hurting the economy at this point. So given that, and given that inflation in general hasn't been a particular problem in China for the past little while, then having a super strong currency in trade-weighted terms, which it really has been, it's soared in trade-weighted terms over the past couple of years, then letting a bit of steam out there makes sense. Having a little bit of a softer currency, it's just the timing is so hard to predict that it's really caught markets off guard.
We also see emerging markets currencies down for what, a 9th day. That is the longest streak in about 21 years, in fact. Is that a yuan kind of anchor currency effect? And do you see more of that once we get past or get to the Fed next week?
Yeah, certainly the yuan is a big factor there, and as you say, the Fed. You just can't ignore the fact that the Fed is being aggressive on rates. That's a difficult environment for a lot of currencies. Obviously, we've got a world economy that is struggling with high energy prices. Just the past few days, clearly the surge in natural gas over Russia cutting off supply. That's adding to the terrible terms of trade shock for a lot of big energy importers. So China is there, but it's a little bit of a different category given its overall trade position. But certainly India and Korea, and just not a very upbeat environment for investors to be looking for opportunities in emerging markets. So clearly an underperformance of a range of emerging market currencies.